All right, hey everyone, Mark here, Mark Pre-Markets. Thanks for joining me for another Greenbridge market analysis. Just running a little bit behind, so I appreciate your patience. So cool, hey everyone. So as you know, I'm going to analyze Bitcoin here. We're going to be looking at the levels and potential signals and possible scenarios for the coming week. If you're new to the stream, please share your question in the channel. I see a number of questions there. If you'd like me to analyze an altcoin, make sure to put USD or USDT after the coin so that I get the correct symbol. Otherwise, if you want to see a stock, please share the stock symbol now. And once I complete my Bitcoin analysis, I can go over your questions and take a look at your charts. Okay, so also a couple of quick things. So I'm not streaming on Thursdays anymore because I have to support my training program now. I have to use that time for that. So I have a special announcement for everyone here. What I'm planning to do is open my training program, which I've been talking a little bit about here and there. I'm planning to open it to students on Wednesday. Okay. So what I'm planning to do is I'm going to schedule a stream on Wednesday at 3 o'clock. That's my plan so far. And I'm going to use that time to explain how my training program works and all the details, and also answer questions about it. Okay. So, I've mentioned it before. It's basically based on my ebook, but it's a 14-day boot camp style training program. All right. So anyway, that's the plan for Wednesday. And I have not mentioned anything to anyone yet. And at this time, I have no students. Okay. So the first group that joins is going to get a very special price. I will talk about that on Wednesday as well. All right, so let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, also, if you want to share what state or what city or what country you are in, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. That's why I sound like the way I do. All right, now, first things first, let's just say hello to a few people. I got Elizabeth from Kauai. How come I didn't get invited? It's like 20 degrees here in Jersey. I'd much rather be in Hawaii. Anyway, hey, thanks for stopping by. It's nice to see you. Hey, travel. And we got HS. Good to see you. Wedge, Kai, Eligius, Winter. I got my people from Romania here. Well, I got Winter Fresh. I don't see what's his name? I don't see my international man of mystery, Schwartz. He's not here. I can't do the stream. I'm joking. All right, so let's talk about first the economic calendar. Okay, I see some interesting questions here that really are sort of about the economic situation. Let's get in. We're going to get into that here in a moment. So first things first, I want to look at the calendar, and I just want to see if there's anything of importance this week. All right. So by the way, it pays to pay attention to the economic calendar because the week before, on Wednesday, well, we had those FOMC meeting minutes, right? You recall that? And usually the FOMC meeting minutes is not really a big deal, but there was something in it that the market wasn't too happy about, and we had that sell-off, right, as a result of the meeting minutes, which is usually a non-event. It's like, okay, yeah, we know what the Fed is going to do and blah, blah, blah. But there were some details in there that made the market unhappy. That's why it's important to be aware of some of these things, especially if you're involved in stuff intraday or if you're involved in markets that can be significantly affected by something like that, like whether Forex or stocks and things like that. All right, so let's talk about just what's going on so far this week. I see 7:30 p.m. tonight Eastern time. We have Australia trade balance, not a big deal. Tomorrow we have Fed Chairman Powell testifies. Now I don't know what time he's doing that. It could be at 10 a.m. It could be at 3 p.m. I don't know. You might want to double check that. But if the guy is speaking tomorrow, he's already given us signals about what he's going to do. So if he's going to reiterate that or get more hawkish, the market is right now in a vulnerable position, and it's getting beat up. So there's a lot of bearish momentum. He can certainly make things more bearish, or perhaps a reversal will develop. The point is he's speaking, and the market's going to be very sensitive to what he says. Okay, so might want to keep an eye on that. Also, tomorrow we have Chinese Consumer Price Index. That's usually not a market mover. On the 12th, we have Consumer Price Index, food energy. Okay, excluding food energy, that's for the US. And that's CPI reports. Okay, those usually don't have an effect, but since the Fed watches them carefully, who knows? Those usually come out at 8:30 a.m. Eastern time, or like 10 o'clock Eastern time. Just be aware of them. On Thursday, we have the Royal Bank of New Zealand. They have their rate statement. That's not really a global market mover. And then on the 14th, we have U.S. retail sales and Michigan Consumer Sentiment Index. Those are usually not major market movers. So, and on the 16th, China retail sales. These aren't really global movers. So the big thing really is Powell testifying, Chairman Powell testifying tomorrow. Certainly, you want to just be aware of it, okay? And see how the market reacts, or perhaps even watch what he says or whatever, all right? Because he may give hints about their schedule or how much he's going to raise rates and all that kind of stuff. That's extremely important information, and the market will react in dramatic ways if he says anything that's surprising or unexpected, okay? All right, so now let's talk about Bitcoin and this situation. Now, I talked about, if you watched recent streams, which I know all of you are familiar with because it's all the same people here, I talked about if we broke 45K, then we were looking at 42K. If 42K breaks, we're looking at 40K basically, or the 38K, 40K support area. Now, I wrote an article on TradingView yesterday talking about basically that this is a good time for dollar cost averaging. Now, people may misunderstand, right? Because I have a comment from Travel saying that I'm basically throwing away my swing trade strategy now in favor of dollar cost averaging, and that, dollar cost averaging can also go wrong. I don't know, maybe you didn't fully understand what I wrote, but I was just saying that dollar cost, these levels are wholesale prices and appropriate for, if you want to accumulate, this is a good time to start, okay? Not 60K, not 69K, not 55K, 40K. This is a much better place to begin accumulating. I mean, look where we are. Can it go wrong? Sure. In any financial market, there is risk. Now, it's how you control that risk. And if something goes against you, if you're managing the risk well, going against you can actually become an opportunity, not a painful situation. Now, my point of the article was, if you begin dollar cost averaging now, right, the whole point of dollar cost averaging is strategic sizing. You're not going to use a stop loss order, which means you're exposed to Bitcoin. If it goes all the way to zero, you will be in it and you will lose your entire investment. That's a risk that is you take. It's a possibility. Is the probability of Bitcoin going to zero, is that highly probable? No, probably not. I mean, while we need to have an open mind and that anything can happen, Bitcoin is probably not going to zero. But it can, 30K is not unreasonable, and neither is 20K. Now, a couple of things I have to say about that. If you recall, a month ago, there were all kinds of phonies and morons and fake gurus calling for Bitcoin going to 85K, 100K, 200K. Where was all that? Where are we now? Where's my 85K? Where's my 200K? Remember all the altcoin video titles? And early investors are going to make millions or billions. Where are the millions and billions? Stop listening to these people, okay? I had people telling me, the seasonality of Bitcoin, and it's gonna, December's a good time to buy Bitcoin. Why? Because you're comparing it to Bitcoin of 10 years ago. This is not the same Bitcoin that we had 10 years ago. This is an institutional Bitcoin. 10 years ago, we had a retail Bitcoin. Institutions are the ones that create seasonality, not small retail traders. Okay, even though there are millions of them, it doesn't matter. Retail traders are all over the place. There's no rhyme or reason to what they do because they react to everything. Institutions have reasons for doing things, right? So that reasoning can actually express itself sometimes in seasonal patterns. Now, I don't believe there's any seasonality for Bitcoin, and all that garbage about, every December there's an 80% chance that Bitcoin will rise. It's all nonsense. That's all infotainment. If you believe that nonsense, you might as well watch TikTok because it's the same value, it's the same quality. Now, all right, so that's my first rant of the day. So let's talk about the Bitcoin levels here, because I'm not going away from my swing trade strategy, but you have to understand something. I don't short Bitcoin, okay? People, how could you not short Bitcoin? Because for one, it removes half of the errors, right? So all those shorts that got stopped out because they got in too early, I don't have to deal with any of that, number one. Number two, it really limits how, when I can take trades, and it really keeps the trade activity or the frequency low, which is what I want. I don't want to have lots of trades because more trades is not better. You need to understand that this business is not set up for us to make money. How could that be? I mean, the broker says we're going to make money, and they give us this platform with all these amazing tools. And this business is set up for everyone else to make money except for us. They profit from us. They make money from us. The brokers, the exchanges, everyone, the vendors, everyone. Okay, the signal providers, all of that. The people on YouTube. No one is doing you any favors. All right, authorities that come out like on national TV or whatever, and they share some kind of economic opinion from their expertise. All that stuff, that's not there to help you. They usually have some kind of other agenda. We may not be able to know what that agenda is, but you need to understand one thing. They're not looking out for you. So this market, right, this entire setup, whether it's Bitcoin, stocks, whatever it is, it's not set up for you to win. Understand that. The reason why I stress that so much is because you have to stop being tricked by the illusion of information. All these people that come out, let me show you, and they make like a plausible argument, like that garbage that I watched about Bitcoin seasonality. Complete garbage. But the argument seemed plausible. Yeah, that makes sense. I'm going to buy some Bitcoin in December. Hey, well, that was like at 55K or whatever, right? Or whatever, and we're a lot lower now. So this goes for the altcoins as well. I have to mention this because there's a lot of garbage. I still see some of these clowns coming out with these video titles. Early investors are going to make billions of dollars by buying these things now. Here's what you need to understand about these coins, and Bitcoin too. We are going into a rising rate environment. Now, Bitcoin has never seen a rising rate environment, and neither have these junk altcoins. Altcoins are speculative assets. There's nothing of value, right? These are not equivalent of value stocks. A stock like Costco, a stock like Walmart, a stock like IBM. Those are blue chip value stocks. They dominate their businesses. They make money. They pay their investors, right? They've been around a long time. That's a quality investment, and those value stocks will likely at least be more stable in the coming tightening policy cycle that we're about to begin. The Fed hasn't even begun, okay? So this brings me back to Bitcoin. Bitcoin and the altcoins are going to most likely have very limited potential in that type of environment, because all that free money floating around, you have to understand, all that stuff that we saw a few months ago and all that nonsense, that was a result of too much money floating around, all this free money, loose monetary policy, okay? That's all that was. It was a bubble. It was just an after effect. Now we're going to see the opposite of that. So that's why I'm not calling for a bear market in these things, but I think their potential is limited, especially the altcoins, okay? So if you're one of these people holding on to these altcoins with hope, you're going to be facing a tough time ahead, all right? So you're going to have to learn how to either manage that risk by lightening up the position, doing something else to compensate for it. I don't know, but the party's over, basically, until the Fed starts to change their tune, and they haven't even started the rate hikes yet, right? So let's talk about Bitcoin. And the reason why I mention all that stuff now is because that's going to affect how I determine if I want to take swing trades or not. Because if there's limited potential, then for one, I want to be more conservative and more selective. Buying into lows, while this is not a bad idea, it's a support level, it's a historical support. We have a bullish pin bar developing here. This is a nice buy signal developing. We had a number of buy signals develop in December, and they all got stopped out. Okay, so just because a buy signal is developing doesn't mean it's going to work out well. Now, if this buy signal, which again, it's in a good location, it fits the criteria for a swing trade. You have to understand, I just explained a much less supportive environment, which means our targets are going to have to be tighter. We have to face the higher chance that it will not follow through. Like the buy signal goes off, it goes up maybe 500 points. Next thing you know, it's against us, right? Because the momentum is not in our favor. The structure is not in our favor. The bigger picture structure is, I mean, it's still bullish, right? I know there's going to be a lot of bears right now. Oh, Bitcoin's a bear, blah, blah, blah. This is not really that bearish. If you look at the weekly chart, it's at a support level. Okay, but this is a wave 4. I'm pretty confident with this being a wave 4, as I've been talking about for months and months and months and months and months. This is likely a wave 4. If this is a wave 4, then it's possible we can test the range low, and that's 30K, maybe slightly lower. All that becomes possible, right? So all these people talking about all this nonsense about Bitcoin 200K, not anytime soon. Not with rising rates beginning in March. Okay, and then he's going to, who knows how long he's going to keep that going for. Maybe he'll give some hints tomorrow about it. But the potential is going to be limited, right? So that's why swing trades in this market are probably going to be even less frequent and with low expectations. Does that all make sense? So yes, a buy signal is developing. If you're interested in it, you have to wait till this pin bar closes. You have to wait till the high gets taken out. And then you're looking at these old resistance levels. Okay, I'm sorry, this old support levels, right? What is that? This is what, the 45K? The 45K becomes a profit target at that point, all right? It's an old support, becomes a new resistance. And for those that are interested in shorting this thing, which again, I don't do, this 45K to 48K or 50K, what's this area here? Low is 40, 46, 450. What's this low over here? 46,560, right? That area here, right? This blue line right here. That area, the entire area. In fact, I can draw I'll draw a box, right? This entire area right here becomes a potential area to go short. That's a resistance area, right? And if the structure stays intact, that's a lower high. If a sell signal shows up in that area, that's why it's a good place to get out of your long if you took a swing trade long. This has nothing to do with dollar cost averaging. Okay, understand the difference. Dollar cost averaging, you're just buying on a schedule. It doesn't matter what the chart does. You're buying on a schedule. First of the month, 15th of the month, you make your purchase, and that's it. If the prices are lower, and they, like this month, you're buying at 40K or whatever, and next month it's at 35K, then you can skew a little larger, right? Because you're at better prices. So instead of buying $500 worth, you buy $750 worth. If the month after that you're at 30K, hey, it's even lower. So you can skew even a little larger because you're getting better and better prices and you're not putting all of your money to work at the same time. If Bitcoin, and then at some point, perhaps over a 6-month or 10-month period, your full investment, right, the full investment amount that you had planned to put into the market will be fulfilled, right? So if you had 5,000, you said, okay, I'm investing my 5,000 without leverage. I have to emphasize that. No leverage, because leverage will cause you problems and make you a weak hand. This has to be one-to-one. People don't like that because when it works out, you don't get rich. Well, but you're also not taking the amount of risk that's associated with leverage and increasing the chances that you get knocked out at a really bad price. That's what leverage will do to you, because the exchange or the broker, they will push you. If it goes against you too far and you don't meet their maintenance margin requirement, they will close the position on you, and it's usually at the worst price. Okay? And you say, oh, but that's not fair. Those are their rules. Those are exchange rules or whatever they are. So in order to avoid that, you really should not use leverage when you dollar cost average, right? You go one-to-one. It's like buying physical gold. You're not using any leverage. You're buying a piece of gold for $1,000, and that's all. If gold goes to zero, that $1,000 goes to zero. All right, does that make sense? Okay. So anyway, that's my Bitcoin situation. Understand the difference between a swing trade and a position trade, and understand that this is an attractive level for a long. A swing trade long, it's also a failed low, right? There's a lot of reasons to go long here, but just understand the limitations. This is also going to affect a lot of altcoins as well, right? I was looking at Chainlink, and even in the midst of Bitcoin breaking these supports, Chainlink was a little red, but it wasn't doing, Chainlink was actually acting relatively strong, surprisingly. So that might be one to keep an eye on. Maybe it's, the hype or the marketing that they're keeping that thing going. I don't know. I have no faith in these altcoins or any trust in any of them. Another thing I want to mention real quick before I move on here and start answering your questions is, listen to this. Altcoins, right, there's like 8,000 of them or whatever. You have to realize that most of them will go nowhere in the future, and only a handful of them will be around, okay? We don't know which handful, of course. So let me just mention this, because, of course, you're going to believe in the coin that you chose. Oh, VeChain is going to be the one, or, whatever, XRP or Chainlink, right? Because of all this compelling garbage that they keep pushing out, right? Well, 20 years ago, when the money came out of the dot-coms, Amazon went from $300, and I've told this story before. Amazon went from $300 a share to $5 per share, okay? $5 per share. Now, none of the experts back then, no one, the chief economist of Goldman Sachs and chief head trader of blah, 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 none of these morons, none of them said, well, in 20 years, Amazon will most likely be at $3,000 a share. No one said that. No one knew that, okay? No one saw that coming. In fact, 10 years ago, around 2010, whatever, you know what they used to say about Amazon? Oh, Amazon, they don't make any money. So, there's really not much potential in that stock. They don't make any money. They don't make any profits. They just basically, a lot of money just goes through their system. Yeah, right. Okay. No one saw it coming. So it's the same for these garbage altcoins. Maybe your coin is the lottery ticket, right? The one that you're in. But you have to understand that chances are it's not, because there's too many of these things, right? So, a promising altcoin, stick with the names that everyone knows. Ethereum. I'm not a huge fan of Ethereum, but Ethereum is the one that basically developed its own ecosystem that everyone built these garbage coins on. So if anyone will be around in the future, it'll probably be Ethereum in terms of altcoins go, okay? And of course, Bitcoin is not an altcoin, it's Bitcoin. But that's like, those are the ones that have any chance. I think have more of a chance than all of these garbage random altcoins that don't really solve any real problems. All right, so what I'm saying is, don't be fooled by fancy talk or all these compelling ideas, or they have the white paper, it's going to do this and it's going to do that, and they're doing this and they're doing that. It's all just entertainment. Think of it that way. It's just like, consider it like watching TikTok, okay, if you're entertained by that garbage. It's the same value. It's the same level of entertainment, all right? Think of it that way. It's just got financial words involved. That's where your money is tied up, and it's highly speculative. These are not investment-grade instruments, all right? So that's my talk on Bitcoin, the altcoins, and all that stuff. Let me move on here, because, I'm talking a lot today, and I haven't even started here with your questions. So let me get into the questions. All right, so Elizabeth, enjoying Hawaii over there in the nice weather. So she wants to see Ethereum, right? Let's take a look at Ethereum. We just talked about it there. I think, again, Ethereum is a long-term prospect. Let's take a look here. And again, that's just on simple, basically on their, where they're positioned in the entire industry, okay? But again, like Bitcoin and altcoins, they're highly speculative instruments. You know what makes me laugh a lot is these clowns that come out and call altcoins blue chips. Okay, they say, these are the blue chip altcoins. What? Blue chip refers to a high quality stock that makes a lot of money and dominates its business and pays its investors and has a solid business model. That's a blue chip stock. Altcoins are not blue chips, ever. Okay? Just something to keep in mind. There's no such thing. But blue chip. People are such, can't believe people believe these people. And they have 100,000 times more subscribers than I do. All right, anyway. I'm just jealous, I know. All right, let's take a look at Ethereum. Now look, Ethereum again, Bitcoin follower, right? Now what did we talk about with Ethereum? We talked about the support level. Ethereum got a little hammered here because it should not have taken out this. This was the equivalent of 42K, all right, on Bitcoin, all right? That was a pretty important support level, and it broke. So if you had a position, I remember you had mentioned you were in something a little early. This should have been where you took your loss, right? You should not be in this anymore. Now, as far as right now, Ethereum is doing the same thing as Bitcoin is doing. It's developing a bullish pin bar. It's trying to develop a pin bar at a level, an important level. Okay, this level right here, again, it's equivalent to Bitcoin. It's the same deal. Same deal as Bitcoin. This is an old support area, right? It's an inflection point, and it's trying to develop a bounce off of that, right? It's trying. Now, again, if you're interested in a swing trade, this is aggressive because now you are fighting the structure. The structure is a series of lower highs and lower lows. So at this time, we have to anticipate that this thing is going to basically produce another lower high right here, right? Why there? Because it's the old support level, all right? This old support level becomes a new resistance. So it's not exact, but this general area, right? So Ethereum may bounce. What do you think is going to happen if Ethereum puts a green, like a series of green candles together up into this area? It's going to suck in a lot of morons, and they're going to go long, okay? You're going to see all your favorite fake gurus show up on YouTube with their title, Ethereum is going to 10K now, make sure you buy it. And they're all going to come out with that like right up here, okay? And that's a very high potential area for a lower high to develop. Now, just because a lower high develops doesn't guarantee that it will make the lower low. But we have to assume, since the structure is still intact at that point, lower highs and lower lows, we have to assume that it's going to try. If it succeeds or not is another story. Now, if it can't succeed, meaning it produces the lower high and then pulls back and produces a higher low, now we have a new piece of information, okay? If it fails to make the lower low, that means it's trying to stabilize. So that would be a good place to try for another long. Right now, this is an extremely aggressive long if you go for it, and you have to wait till the candle closes, and the next candle needs to take out this candle high. Does that all make sense? All right, and it's aggressive because the momentum may not go very far. You may not even make it up to that old resistance. It may not even make it up there, okay? Especially with, a guy like Powell speaking tomorrow and all that kind of stuff. I mean, who knows? So it's all about, look, the trader mindset is all about adjusting to information, not predicting information and then sticking to that. That's not it, because you have to be very flexible. Markets are highly random and very unpredictable, and you have to respect that. So, the setup develops, and you say, okay, it's developed. I can measure my risk, which is the most important part. And by the way, that's what my program covers, all that stuff. It's the most important part, and now it's up to the market to do its work or not. If the market fails to do its work, you must adjust. And either you take your stop, which you had originally planned, or maybe you get out earlier because the market is saying, hey, I'm not cooperating with you, and the signs are pretty clear, okay? Or the other outcome is the market cooperates, and it does what you had anticipated, and now it's about taking your risk off at levels that are higher than what you risked. For example, people say, I don't know where to get out of this thing. Well, are you at 1-to-1, 1.5-to-1, 2-to-1, 2.5-to-1, 3-to-1? Those are the places where you should be taking profits partially, right? Because you are ahead of your risk. That's all that matters. As long as you're satisfying that formula, you will come out ahead. If you let greed get in the way, I want to maximize this. What if Ethereum runs to 10K from like that fake guru clown just told me? It's going to run to 10K. I want to give it a chance. Well, you could give a portion of it a chance, but it's very a good idea to take profits when you have those ratios, especially in the environment that we're about to go through. Okay, potential is going to be limited, which means you have to expect less from your swing trades. It's a effective behavior. All right, so that's Ethereum. And I'm talking way too much today. I think it's because I haven't spoken in a while, and I because I don't really talk to people. All right, so HS, good to see you. Theta, and what else you want to see? SHIB. Oh, I haven't looked at that one in a while. Let's take a look. So Theta. All right, and I have to catch up to the chat. I know there's a bunch of chat and I haven't seen it, so I'll get to it. Theta. So Theta, look at this situation here on Theta. This is what I mean about hype. Okay, look at this. See this? This sucks in a lot of people. There could have been some news, some other garbage or whatever, and that's what's the first thing I tell people? Don't chase these things. Don't chase them, especially when they go into resistance areas, which that was pretty clear. Okay? All right, so that's fine. That's out of the way. Where's Theta now, and is this a level of interest? Well, you have a potential double bottom location. It's certainly a location of interest, right? You're not buying the top, certainly not buying the top. You also have another support area. All right, so you have some overlapping support. This is definitely an attractive place for longs, swing trade longs. I'm not a big fan of dollar cost averaging into garbage because most of these, like I said, these are bad choices. When you want a dollar cost average, you pick the best, or you pick, something that's an investment grade because you need all that behind you. If you pick something that's extremely extremely speculative, like something like this, you're asking for a lot of trouble. Okay, so I would not dollar cost average. That's not even a consideration for these. So swing trade only, right? Now, so you're in an area of interest, but current candle, the price action here is not supportive at all. Look, this current candle took out yesterday's low. That's a sell signal. Now, I wouldn't short anything like this either. You have this entire area where this can be a failed low, and Bitcoin is trying to put in that failed low look. So this is an area of potential bounce. It would be an aggressive swing trade, just like Bitcoin. So if you're interested in that, then what you need to wait for is you get maybe an inside bar develop over the next couple of days, or maybe the next candle takes out the high of today's candle, right? This is the high of today's candle, does something like that. That would be a long signal off of a support. Your risk would be defined basically here on that low, not the low of the intra candle. It's going to have to be the low of the entire move there, right? Because chances are, if this thing's going to fail, then it would have to go that far. Theoretically, if it's going to succeed, it should not go that far. It should not test that low again. You should get like a higher low or something should develop if it's going to pull back a little bit after you buy into that long signal. Like I said, if you're buying these things, you're buying into an environment that's no longer favorable. So, and you're buying into structures that are not favorable either. There's nothing really bullish about this. You have lower highs and lower lows all over the place, and this thing's testing supports. The likelihood of breaking the support is high, especially if Bitcoin breaks 40K and you're seeing Bitcoin at 35K. All of these junk coins are going to break. All right, they're acting relatively weak right now, so you have to keep that in mind. If you're interested in the long signal, like I said, understand it's highly aggressive and have conservative targets. Don't sit there and think, well, it's going to go all the way up here, because it's not. It's not going there anytime soon, all right? Maybe if you want to believe some fake gurus, maybe they can convince you, but this would be a much more realistic area. Even that's a little aggressive if you're interested in a swing trade, because again, it's the environment. Money is not going to be chasing these things. I don't care how great their project is. I don't care how many plans they have coming out and all that other nonsense. The Fed is taking money out of the market, which means there's going to be no money going into these things. Again, look at that NFT situation, right? The NFTs. A few months ago, NFTs, this is the thing to be in, right? $40,000 for a bunch of pixels that are worth nothing. If that's not a sign of inflation or too much money floating around, I don't know what is. When people are buying graphics for $40,000 that are worth nothing, okay? It's only a perceived value. So anyway, all right, so that's Theta. And what was the other one you mentioned? Oh, SHIB. I have to take a look at SHIB because SHIB. Let's see what this junk coin. This is a meme coin, complete garbage. Okay. Realize too, people that pump these coins understand that they're getting paid. Right? A marketing team has come to them and said, "We'll give you money if you push our coin to your big following." Understand that. I know many of you know that, but if you don't, understand that is their incentive to talk about these coins. They're not doing it for fun or because they enjoy it or because they want to help people. They're doing it because they're getting paid, right? When these coins are completely out of style, you watch half of these fake gurus are going to start selling, fitness products or something, all right? Just something to keep in mind. Now, SHIB. SHIB broke this support. You see that? That's not what it should have done. So you're still in a supportive area, though. I mean, look at this area here. You have this support here. So the areas are attractive. They certainly are. You're not buying highs. So that's a good thing. If you're thinking long, okay, you're in the right location for that. But as far as structure and probability, which are things you cannot see, right? You're fighting this structure, right? The lower highs and the lower lows. So the best thing to do in these situations, whether it's SHIB or some of these other garbage coins, you want to wait for the structure to change, because getting in too early is much more costly than what you miss out on when the structure changes. Here's what I mean by that. So if you were buying at this double bottom or these lows over here, yeah, you got some good prices and it looked promising, but now look, right? Now it's costing you money and it's getting uncomfortable and this and that. If you had just waited for the structure to change, which, like, for example, this was an attempt at a change in structure because it took out this little resistance area here. That was an attempt. So if you had waited for that and then waited for the pullback, which is what you got here, if you took a chance here, at least your risk, you should have been stopped out and your risk would have been pretty limited. Okay, but at least you had a chance that the structure was changing. Now that this thing has proven that the structure is not changing, then you shouldn't do anything. If you want to be more conservative, wait until this thing starts taking out resistance levels before doing anything. Your first resistance is right there. So what is that? 34.45? 34.45. It needs to take that out first. So it needs to do something like this, work its way up here, right? Breaks. Oh, okay, we got a resistance break. And then you wait for some kind, perhaps you get a pullback or something. Maybe an idea to consider is on the resistance break, you take a small position, so at least you have some of it. And if it pulls back, you then can add to the position. So what you do is you basically take your average position, your normal position, and you cut it in half, or you cut it into thirds. So if you normally buy, let's just say you normally buy 100 coins, right? Let's just say, as an example, you buy 30 on the breakout, then you put an order in for 30, see if you get any kind of pullback. And then if it never gives you the pullback, then you just have to look for the next buy signal, and you continue to add to that position until you reach the normal size that you're going to buy into. So it's sort of like averaging in, but it's not the same as dollar cost averaging in terms of risk, because you still have to use a very well-defined stop. All right, does that all make sense? So that's what I would do, something like SHIB, but otherwise, your probably best bet is to avoid these things until they start to change their tune. And we're not going to an environment where the likelihood of that is high. Does that make sense? So that's why I'm warning you, do not start piling into these things, even though there are good prices. We don't have an environment that's going to be supportive for these coming. The Fed hasn't even begun to raise the rates, and we don't know how these things are going to behave. All right, let's take a look at the next question. Wedge NSO from New, I can't even pronounce the beach name, but nice beach in Florida. Sure, it's a lot nicer than it is here. Kai wants to see the bonds. Yes, man, I'm so behind. He asked like an hour ago. So here's the bond market, right? The 10-year note futures. Look at this. Now, as you all know who follow me, I've been talking about the bond market for months and months, but who cares about bonds? Bonds are so boring, right? Who trades bonds? But I was talking about this bearish trend in the bonds forever. And I kept saying, The bonds are showing a rising rate environment. They're reflecting a rising rate environment. Someone knew something back then because the bonds kept selling. Okay? Who trades bonds? Governments, large hedge funds, banks, the Federal Reserve, right? People who know stuff, people that make law, people that control the money. So little retail traders are not in bonds. So bonds could be a very important factor. And I always tell people, keep an eye on these things. This is a major break in the bonds. This confirms. Now, you know, a couple of months ago, again, no matter where you look, you always see some moron, some clown on TV. Yeah, we're in an inflationary environment. So, you know, you want to buy things like gold and you want to buy... Blah, blah, blah. Nonsense. The bonds and the dollar were not reflecting such an environment. Okay? The bonds, in an inflationary environment, the bonds should be rallying. Look, the bonds have been selling off for months. Right? This is not a bullish trend. Lower highs, lower lows, and we broke. So as long as the bonds maintain this structure, meaning that's right now, that's a very strong, that's an old support, which is now going to be a new resistance. So yeah, you may get little pop-ups in the bonds, but little pop-ups are meaningless. They don't mean anything. The bonds have to make a very significant move to have some kind of effect, all right, or to mean something. Look at the weekly chart. Okay, look at this. So, and this is what really tipped me off. I mean, I was looking at this for months and be like, man, this is not bullish, right? We had this lower high and we were consolidating here all throughout the holidays. Hey, the bonds aren't doing anything. Hey, nothing to worry about. Hey, the dollar's not doing anything. Hey, look, the S&P making all-time highs during the holiday rally. Oh, everyone's so happy. What was I saying back then? Stay away from these things. Stay away. And now we're seeing, oh, stocks aren't supposed to pull back like this. How come they're pulling back? Well, they haven't even, this is just like the beginning, in my opinion. Now, anyway, so as far as the bonds go, sure, the bonds are at a potential support, but the structure, you have to pay attention to the structure. So I'd be anticipating lower highs and lower lows until this thing proves otherwise. And there's nothing there at the moment that's proving otherwise. Yes, we're at a support, but it doesn't mean that support's going to hold. So that's how you have to treat the bonds, right? And right now, they're saying rising rate environment. They confirm it, and they're confirming what Powell has been pointing to. All right, so I hope that helps. You know, this just is basically, it's a reflection of interest rates. And as interest rates rise, that's bad for everything that trades against the dollar, and the dollar will strengthen. So all these fools and all these clowns that have been talking about, oh, inflationary, blah, 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 blah. The dollar has not been saying that for months. So either they don't know what they're talking about, or they just have another agenda and they're trying to protect a position or something. All right, we don't know. There's no way to know. All right, so that's that. Let's see what else we got here. That was ZN1. Eligius, any insight about Russell? Yeah, good question. So the IWM, the Russell 2000. Again, right, the Russell 2000 is made up of small cap stocks, right? 2,000 small cap stocks. First of all, this thing's been range bound. So this goes back to the rising rate environment. These stocks are going to be they're the least likely to perform, right? They usually don't perform well in a rising rate environment. These are all the highly speculative growth stocks, right? So yeah, there's a range support there. And if you want to be aggressive, look at the pin bar today. You want to be aggressive with something like this and try to go for a very short-term movement, like a bounce, like a swing trade or something. Okay, you know, you can try that because you're at this range low. But in time, as the tightening cycle starts to take effect, this thing is going to get hammered. Okay? So look, we can look at a weekly chart and we could see that. Look at this consolidation, right? Look at this breakout from weeks ago, and look at the fake out. And imagine all the people that thought, oh, yeah, the Russell 2000, yeah, right, small caps, all the day traders in the small caps, blah, blah, blah. Yeah, whatever. They're caught in this thing. Now, we're back at this support. This support, because the environment is no longer favorable, this support is likely to break. Maybe not this time, but it's likely to break. That's what you have to keep remembering, is that the environment is no longer favorable. Now, any negative news that comes out in this environment will probably be exaggerated or more magnified. Just like in a bullish environment, right, when the Fed was being quiet about their intentions and everyone was just enjoying the free money, positive news was over exaggerated and negative news was sort of like, shrugged off, who cares, right? Not really a big deal. Oh, the market pulled back 100 points, just buy it, whatever, right? That was how it was. Well, we have not seen the opposite of that. And understand that we have not seen a rising rate cycle in more than 5 years. I don't remember when the Fed raised rates. I can't remember when the most recent time when they raised rates. I'm sure we could look that up, but you know, the market's not going to like it, especially a market that's full of hot air, that's just basically all stimulus. So to answer your question about IWM, I would be anticipating this support break. So you want to be aggressive and you want to try to buy the support. It's certainly that type of support, but don't be surprised when it breaks, all right? And if you want to try to play that break, then you know that would be an aggressive short at the low, right? If you short this thing on the break, that's also aggressive because it can fake out. If you want to short this thing, there's really two ways to go about it now, right? You wait for another test of like the middle of the range where there's clearly a resistance, right? You wait for something like that, or you wait for the break and then you wait for the retest of this level, right? Again, that type of movement takes a lot of time. It could take a week or two for all that to develop. But those are the ways to consider the IWM, you know, or you take the aggressive counter trend, which would be this movement here. And that the aggressive counter trend, there's nothing wrong with it as long as you understand what you're doing, what you're getting into, and making sure that your risk is defined. Because if this thing breaks the wrong way, you don't want to be stuck in that, right? So you have to make sure your risk is defined. So that's IWM. So thanks for asking. Okay, so Winter, vaccine, thanks for stopping by. Hey, Peter, would you look at Newmont? Now, Newmont, what is Newmont, NEM, USDT? What is that? Is that a coin? That's not a coin, right? I didn't think so. So NEM, the stock. Yeah, so mining. Now gold. So in a rising rate environment, again, we go back to that. Gold will not perform well. Now keep in mind, gold has not performed well while we had the easy money environment. And now the environment is about to change. So these miners, while this is not a bad looking chart on Newmont, I mean, Newmont is one of the premier miners. It's certainly a good way to get exposure to gold, especially for long term. But understand what gold, you know, gold is not going to be in an environment that's going to be beneficial for it. Gold is to protect against inflation. We're going to have the opposite of inflation. So gold will not likely perform well. Maybe some other catalyst comes out, but chances are gold is going to be having problems. Gold is stuck in that wave 4. It's still in the wave 4. So a lot of false starts and a lot of going nowhere. So if you want to get involved in something like Newmont mining, this is probably not a good location, right? You're sort of like the middle of the range here. A lot of resistances here. You have this nice initial push, right? This nice initial move. That's good. But because of the prospect that gold will not likely perform very well, you might as well wait for better prices. You might as well wait to see if this thing can test here, right? Now also take a look at gold, because gold is going to be an important factor. I mean, look at gold, right? Gold keeps fluctuating around between like 1830 and like 1790, 1780. Look at this resistance here on gold. I mean, it's pretty much stuck in that area. So gold is going nowhere. So basically, just like gold, if you're interested in Newmont mining, if gold can test this support area here, which is likely in this environment, again, that's not even gold being in a bear. That's just gold pulling back to its range low. That's probably the better place to start buying Newmont if you want to accumulate some. That's how I would treat something like that. Or the same as gold, right? It's basically, you're just buying, think of it as buying shares of gold. Of course, the miners can perform, other variables affect the mining stocks. So, you know, it's not just all gold, but obviously gold is going to be a big factor. All right, so if gold prospects are low, which I think they are, as long as the dollar continues higher, you know, gold isn't going very far. So don't get sucked into anything. Don't be buying resistance levels or breakouts in an environment that's not exactly in your favor. Does that make sense? Wait for support levels wait for reversals at support levels. For something like this, that may take a month or two. All right, so I hope that helps. All right, let's move along. Hey, Anthony, good to see you. Jose from Mallorca. Mucho gusto. Yeah, that's probably a nice island in Spain. Much better than Jersey. I definitely take the island in Spain. All right, so let's see here. The dollar index. And Jose, that's a good thing that you bring up after we talk about gold. So the dollar index, right? I've been talking about the dollar index since August, and I noticed it changing its trend. No one paid attention to me, okay? And I kept saying, the dollar index is bullish. And this is all while Chairman Powell, transitory inflation, and blah, 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 right? Meanwhile, someone knew something, because who trades the dollar again? Banks, institutions, governments, people that know stuff, okay? They know real information. The dollar has been nothing but strong, and it's been consolidating for a few weeks, but it's maintaining its bullish structure. As long as the dollar maintains this look, higher lows and higher highs, and right now we're fooling around in this consolidation, as long as we maintain that, it's probably going to break higher. Especially, we just looked at the bond market. The bond market's breaking lower, which is a bullish pressure for the dollar. That's why I have very little optimism about gold. This is also bearish for currencies, right? And most likely bearish for Bitcoin and all the junk coins that follow it. So, stronger dollar coming. Let's look at this. So it's consolidating for a while. And you can't go these little red movements. Oh, the dollar's pulling back. Look, the dollar pulled back 30 cents today, and it's weak again. No, dollar's not weak. It's maintaining this support. See this level right here? What is this? 95.67. So 95.5. Even if it breaks that by a little bit, right? It could easily fake out in here somewhere and still be bullish. It's got a long way to go to become bearish. It's going to have to break this level over here, which is what, like 93? 93 and a quarter? And it's got a long way to go. So I'm bullish on the dollar, especially now that the Fed's starting to, get hawkish and hasn't even begun with their rate hikes. The dollar has been pricing that in for some time. And that's been helping me stay away from a lot of garbage and a lot of hype, because people have no idea what they're talking about. And it really shines through when you're looking at something like this and being like, oh man, where these things think they're going in the face of a rising dollar. So watch for the breakout in the dollar, okay? The consolidation breakout. You see like a push of this price here. What is that? 96.5 basically, right? You're going to see the move continue. That's great shorting opportunity for the euro, pound possibly, right? Let's take a look at the pound. Now the pound has been unusually strong. They must have like their own stuff going on. But even though this is the case on the pound, in that rising dollar situation, the pound is at a resistance anyway. So short signals start to show up, or lower highs start to show up in the pound. The pound probably a good one to short. Right? Same with the euro. Anything that trades against the dollar. Does that all make sense? So thanks for asking about the dollar. The dollar and the bonds are two markets that you should be watching every day. Just checking them for 2 seconds and just seeing where they're, how they're changing. Okay? I take a look at this. One of the first things I take a look at when I look at my group of things that I look at, I always make sure I check out those two markets, because they tell me a lot about what to expect soon. Okay? And how to shape my thought process going forward. And what do I, where do I want to be aggressive, and where do I want to be more conservative? And my aggressive is pretty conservative to begin with. All right, Jose, so thanks for asking. Hey, David. David from Miami. Oh, that's another nice place. I'd like to be in Miami too. All these nice warm places with palm trees and stuff. Okay, Shervin. Hey, Shervin, good to see you. So Ethereum. So David, I went over it earlier. Shervin from Canada, from Vancouver. Cool. Sorry, Shervin, I don't want to go to Vancouver. Anywhere cold, don't even talk to me. All right, so anyway, thanks for mentioning. Peter from Slovakia. Cool, Peter. Andre. Hey, Andre, good to see you. David. All right, I'm just catching up on the stream here. Just catching up. Oh, from the UK. All right, cool. Thanks for stopping by, David. Good to see you. It's like evening over there, so I appreciate that. Alex from Romania. Got Alex. I'm still missing Schwartz. I don't see Schwartz today. All right, Schwartz is going to come soon. Oh, well, yeah, sometimes he doesn't come on time. You know, Schwartz, when you're an international man of mystery, I mean, you're busy. You got things to do. I understand. It's okay. Kim from Argentina, mucho gusto. I don't know if you say it that way. Pin bar and SPX, NASDAQ and BTC. Okay, so, yes, let's take a look at that. Because now this, look at this. Earlier today, these things were getting hammered, right? This is the S&P. And for whatever reason, you know, I don't even know why they were getting hammered because I pay no attention to news. I don't care why. I don't care if, you know, Turkey's going out of business. I don't care. It doesn't matter to me. What matters to me is the levels, okay? And I was looking at this and I'm like, you know, the NASDAQ was at like 150 something. I'm like, wow, that's a good freaking price. I'd love to get some there. But, you know, of course, it's better to wait for the close. Look at this close. So this is the S&P. This is a potential long signal for a swing trade, definitely. All right. Now, the high of the candle would have to be taken out. Now, again, keep in mind, I just finished talking about how the Fed is going to be promoting an unsupportive environment. That's okay. If you're looking for short-term swing trades, that's okay, right? You could go against that because you're not looking to be in this for very long. You're just looking for a decent movement, right? Possible test of the high. If you don't get the test of the high, maybe some resistance in here. There's plenty of opportunity to do something with this, right? There's plenty of opportunity. There's some profit opportunity in there, and you're not taking long-term risk. So a swing trade, an aggressive swing trade in this case, is okay. This isn't even that aggressive because the structure, if we compare the structure to like the S&P and Bitcoin, this is a much healthier structure, okay, compared to Bitcoin. Bitcoin is, so a break of 47 tomorrow, especially if you have access to the CFDs. Now, the thing is, the risk is very wide here. Look at this range of this candle. That's very wide risk. 45.80. So you have to risk 110 points on the S&P. That's a lot, okay? That's a lot. The S&P usually doesn't have that kind of range intraday. That's abnormal. So you have to keep that in mind. And so one way to adjust for that is smaller size if you want to put your stop below that low, or you want to put your stop tighter. Keep in mind your chances of getting stopped out are going to be higher, so you have to realize that. Don't make the mistake of going to an intraday chart. Oh, I'll just look at the 30-minute chart and I'll go to the support on there, because all of that is meaningless when it comes to these bigger picture charts. Smaller time frame charts do not carry the same weight. The levels, while they may work intraday sometimes, they're very unreliable, especially for this type of stuff, okay? Let's take a look at the NASDAQ real quick because it's the same thing. Again, look at this, right? Beautiful. Look at this. On top of that, you have a nice failed low. Look at that. Where did we close? 15.6. That's impressive. This thing was at 15.150 at like 10 a.m., okay? So that's a huge move. Chances are this thing's going to bounce. Now, this is an opportunity for you if you're into these markets, because you're not buying the pin bar. You're waiting until the high of the pin bar is taken out. The pin bar is there. The setup is there, and it's a beautiful location. So something like the NASDAQ can easily run to the middle of the range here. Okay, that's within reason. And what is that about? 16.1 or so. Even the high 15s, that's a nice, you know, you can at least justify 1-to-1 or maybe 1.5-to-1 risk in this type of situation. So certainly, if you follow these things, watch for that break tomorrow. That would be a buy signal. If you were aggressive earlier and you stepped into this today, you have a beautiful price, and now you have a buy signal that's in process of developing, right? Great location. Does that make sense? So, you know, I'm excited about that. Not for long-term prospects, just for a quick, you know, multi-day bounce. That's what you're looking at. Maybe for the week. Maybe Powell says something tomorrow that gets this momentum going. Or Powell may say something that gives you a red candle, right? You may get a red candle that looks like that. So that's why, like, you know, my voice, I may sound more excited right now, but don't be misled by that. because again, what excites me about this is the setup is crystal clear, right? But it doesn't mean that it will follow through. So tomorrow's candle can look like this. And if it looks like that, that's not what you want to see, because that's not a continuation of momentum. The pin bar is a sign of momentum. So we should see this tomorrow. That's what we should see, okay? Not this. So if you buy, let's say tomorrow at the open, you buy it, breaks that high, you buy it, like, all right, I'm in this thing. And then it closes like this, right? It gives you the red candle. You need to get out, right? Because that means the next candle is most likely to break that, right? That would be continuation, bearish continuation. You don't want to get stuck in that. So just keep that in mind, right? This goes for any type of market. This goes for, Bitcoin too. By the way, Bitcoin. Are you people familiar with BITO? B-I-T-O? I've never really looked at this, and then someone brought it to my attention. This is basically the Bitcoin ETF. So I think it's a good alternative if you don't want to trade Bitcoin itself. There may be like a premium associated with this or whatever, but it's only a $25 stock. So, something to keep in mind if you want to. What's nice about this is you can buy one share at a time or whatever. It trades like a stock. So, something to keep in mind there. Just wanted to mention that. All right, let me see what other questions I have. Thanks for asking, Kim, about SPX. If BTC goes to 20K, what do you see Matic going to? Douglas, good question. Well, let's take a look at Matic real quick, right? What's going on with Matic? Matic. Can I get the right chart, please? All right. So, look, it's going to put pressure on all of them, right? Now, Matic right now, first thing you want to do, you want to take a look at a weekly chart. Look where Matic's coming from. So, Matic, why is this important? Why should we even bother paying attention to this? Because it means a lot of people are stuck. This is a failed high, right? This right here is a failed high because it went slightly higher than this high here and failed. This is a weekly chart. It means a lot of people are caught in this thing because they watch clowns on YouTube promoting these garbage coins. So I know I'm being harsh, but what it means, the technical picture here is not exactly favorable. So when a lot of people are stuck, chances are these people are going, the more pain that they take, the more banging out they're going to do or getting margined out of their positions. So you have to watch out for that, right? If Bitcoin fails and you see Bitcoin at 20K, this thing will probably break those supports. So you have to keep that in mind. If you're in this thing, you're going to want to define your risk from one of those supports. Now, right now, the current levels on something like Matic, these are just like those other coins we looked at, like Theta and even like SHIB and all them. They are at attractive levels. These are not unattractive for longs. You're buying a pullback, okay? We're in pullback territory. That's good, but the structure, the recent momentum is not in our favor at all. We have lower highs and lower lows all over the place here. So what to do? Again, if you want to be aggressive, you can go for buy signals. You have a buy signal. That green candle took out the previous candle high. You can say there's a buy signal in there. Current candle showing you a potential pin bar, like, just like that NASDAQ we looked at, except the NASDAQ has a very dramatic pin bar. This one is an average pin bar. You take out the high of that pin bar, that's your buy signal again. So you can have basically two buy signals right on top of each other there. And your risk will be defined by the low, the swing low over here, which is what, $1.90, okay? So that idea is very aggressive because you're going against the lower highs and lower lows. So chances of it following through are going to be low. You need to also make sure that you're exiting at resistance areas that are clear. This is a clear resistance area right here. Okay, that's a pretty clear resistance. Why is it clear? Because there was resistance back here. That's going to have an effect going forward. So you want to make sure that if you're in it and you're greater than 1-to-1 or at least 1-to-1 at that point, you should be taking something off the table and not asking me if you should continue to hold it. You should automatically be taking something off the table. Speaking of Matic, automatic. All right, my joke for the day. Don't quit your day job. That's where you should be taking something off the table, right? And if it's not producing a sell signal at that point, then you try to let some ride. But again, like I said, the environment is not favorable. So it's more reasonable to anticipate support breaks and for these things not going in your favor. Do not rely on hope, and do not rely on all this fake nonsense that people are coming out with. Assume that these things are going to break because they're in an unfavorable environment. Okay? Assume that. I could be wrong. Okay? And maybe the market, maybe these things don't react as harshly as I anticipate as we go into the tightening cycle. But I think it's more reasonable to assume that we are, so that you're defensive. And that's the key thing here, right? I think that being a defensive trader, no matter what environment you're in, is a benefit. Because, you know, when you're in a bullish environment, you may see it as a liability because you're going to miss some moves. And people criticize me for that, right? In a bullish environment where things are just, anyone is making money, some moron opens up an account, right, a week ago, and he throws in this big position, no regard for risk, and doubles the account. This is easy, right? That type of stuff. And I get criticized because I miss a move here and I miss a move there and this and that. But I'm defensive. You know why I'm defensive? Because I've lost a lot of money. So I respect risk and I understand risk. And when I see risks that I don't like, I don't care what the market does. I'm not interested because I know that eventually the market will show me a situation where I am willing to take risk. That's being defensive. And that, I think that's a much more effective mindset, especially in an environment that's not going to be so easy money. All these phonies and all these clowns that, you know, have been bragging about their money and blah, 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 that's going to go away. Okay? And they're probably going to lie. Oh, yeah, I'm still making money. I'm getting involved in Forex now, or I'm buying, I'm buying, I don't know, NFTs, whatever. So just keep that in mind. Be defensive. Think of risk first. All right, so I hope that answers your question. That's Matic. Let me see what else we got here. Todd, I don't know if this is the button. This is the bottom. I don't know if this is the bottom. Sorry, I can't see. But we are clearly not at a top. Yes, buying here, I would not be buying the top. Yes. Todd, you stole my words, or you borrowed them, okay, which I'm going to send you a bill for. But we're not buying it. This is clearly not a top across the board here, right? It's just like with Matic and those other coins we looked at, and Bitcoin and all of them. We're buying, this is clearly a pullback. But just understand that because the environment is no longer in our favor, the pullback may not bounce, or maybe there'll be a temporary bounce. All I'm saying is be prepared. That's all I'm saying. Okay, I don't want to scare people out and think, oh, we're going to go into a bear market and Bitcoin's going to 15K. No, I don't believe that either. But I see we're at supports, and I'm not seeing structure stabilize. So when the structure stabilizes, then I think it would make more sense to start, being more aggressive, taking breakouts, taking higher low type of trades, right? Like that. Does that make sense? But yes, you are correct. We're certainly not buying the top. And you want to be thinking, at least thinking long at current prices. All right, James, I heard from a paid source that an increase in interest rates is not bad for risk-on assets. I don't agree with that at all. Okay, obviously they don't understand what rising rates does to things. It's not good for speculative assets, right? And I've seen it. So I don't agree with it. And that's why I'm more defensive and more cautious now. I'm staying away from, I want nothing to do with stocks, right? I want nothing to do with these growth stocks, unless, again, it's a swing trade, something quick, something short term, right? Okay, no problem. But as far as buying inventory and investing, no effing way would I touch these things right now. I've been saying this for weeks. They're at highly vulnerable levels. And you want to go back to the S&P here. Okay, want to go back to the S&P because that's, what we're talking about. The S&P has not even, this little pullback that we had earlier today, it's minor. It's not a real pullback. This thing has a long way to go, right? And we're not even in the rising rate environment yet. So I suspect the S&P is going to start breaking these supports, and we're going to see a corrective move, right? This move that we see here is a result of stimulus, too much of it. That's what this is. So what happens when they take this money out? So I've been, that's what's getting me very cautious. And if you want to call it bearish, I guess you can call it bearish, but I'm cautious. And if I'm going to be investing in stocks, I would like much better prices. And I think now we have a chance of seeing better prices. It may take 6 months. It may take a year to see some ridiculously low prices. But so far, my assessment has been correct as far as the way markets are behaving and what's going on here with the interest rate situation. All right, so I'm just going to go by that. But by the way, no one knows anything, okay? And I'm a big proponent of that. I don't know anything either. No one knows anything. So yeah, you may be paying someone, but they're just going to say stuff, okay? No one knows anything. Always keep that in mind. I go by price and market structure. Price is reality, okay? Like I always tell people, don't listen to people, listen to price. Price is honest. People are mindless, right? They're too busy on their phones all day, watching TikTok. That's what people do. Price is honest and structure is clear. I could be wrong. Price will let me know if I'm wrong, and then I will adjust to price. That's what I do. I pay no attention to news. I pay no attention to experts. I go, oh, but this expert said this. I don't care what the expert said. It does not matter, right? They're not looking out for me. So price and structure, and then I adjust. I'm not always right, but I'm looking at is risk. And if I'm willing to take a risk and I'm wrong, that was a risk that I was willing to take, okay? And not being in a market, right? I don't look at that as a liability. Some people do. Oh, you're missing out. It doesn't matter. I don't have any risk on if I'm missing out on something. So, my money is not exposed to anything. Eventually, opportunities will align that make sense to me, and then I can take risk at that point, right? You have to think like that. If you think the opposite way, like, oh, you're missing out, that's the mindset of greed and the herd mentality, which clearly doesn't work very well when markets get confusing, right? We've been in an relatively easy market since 2016. If you think about it, right, the market's only been going higher and higher and higher and higher and higher, thanks to an easy money Fed, right? A very loose Fed. The Fed is going to change. So anyway, that's what I think of that. Okay, let's see, Todd. Dollar cost averaging is about building your portfolio. Another thing I learned from you. Yes, right. It's about building your portfolio as long as, again, you're timing it properly, and strategic sizing is really the key thing, right? It's really making sure you don't get too big too fast. All right, Todd. We are hopefully 100K smarter than 100K. I agree with that. My following is certainly much more informed. It's all the same people that keep coming back. So obviously you recognize the fact that at least I'm not saying that I'm better than these people or smarter than them, because it really has nothing to do with that. I'm just more in tune with not doing what they do. Okay, I'm more in tune with the psychological aspects of the market and basically doing the opposite, or being a contrarian, because I know that that's what works. I've been in this game long enough. Keep in mind, half of these clowns that you follow have been in this game a couple of years, right? They brag, oh, I'm a 5-year trader. I've been in this more than 20 years. I've seen a lot of nonsense. All right, so I have a good eye for nonsense. Anyway, all right, enough. I'm yelling today. See how excited I am? I'm yelling. Kim, what was wave 2, 2018 to 2020? Is it possible to be similar? Okay, as far as Elliott wave goes, all right, let's go back to Bitcoin. We got an Elliott wave question here. Now, on my wave, I have waves on this chart. Do I still have them? Right, so wave 2 is base. Wave 2s are consolidation type of waves, right? They're not motive waves. The move that we had to 64K originally, you see here, right? See this box up here? That was wave 3, right? Now, people get very confused because they think that the next wave, right, which is this wave here that went to 69K, because it made a higher high, they think that that's another motive wave. But wave 4 does not necessarily, it can it can make a higher high slightly like it has here and still be a consolidation. People don't get that, I know. But I called that a long time ago. And I said, if this thing fakes out, it's a wave 4. Also, one characteristic of a wave 4 are three-leg moves. And look, there are clear 3 legs up to 69K. That's clearly 3 legs, right? And then we have a possible 3-leg situation going on right here. That's typical of a corrective structure or a corrective consolidation. So that's what, pretty much supports my argument that we're in a wave 4. As far as repeat, you said here, is it possible to be similar? Well, no, you can't look at it that way. It's just what comes after wave 4, wave 5. But there needs to be certain things in place for that to happen. We need a supportive environment. We need catalysts. We need stuff. And I don't know. I suspect that the rising rates are not going to have a positive effect on these things. I don't know. I've never seen Bitcoin behave in a rising rate environment. I suspect, since it's a highly speculative asset, that it will follow what other highly speculative assets do, and that is not perform well. So that's my assumption that I'm going to go in with. If I'm wrong, I will adjust. But you have to understand something. As a trader, I don't marry opinions, right? I have an idea, I have my assumption, I have my assessment. I go with it as long as the market agrees with me. If the market says, hey, you're wrong, okay, no problem, market, I'll adjust. And I adjust. So I may have a certain opinion now. The market may change its look, and then I have to now reshape my idea. I follow the market. I don't predict the market. I don't pretend to know more than the market, because no one knows more. Unless you're an insider, no one knows more than the market. That's why you have to, one of the main things you need to really internalize is no one knows anything, okay? No one knows anything unless they're an insider. So let me see what else here. Thomas, Cosmos, oh, Adam, sure, let's take a look. Aloha, are you in Hawaii too? Are you in Hawaii with Elizabeth? Man, all these people in Hawaii, I'm so jealous. All right, let's take a look at Adam. Now, Adam's been relatively strong, obviously. Relatively strong to Bitcoin. Look at this. It could be because of news, whatever, right? Hype. These things get some good marketing teams going, and they get a crowd to jump into this thing. Here's the thing. So Adam is in a location of resistance. This is a weekly chart. This is not a good place to be buying Adam. This is a good place to be selling, right? Taking profits if you're in from a good price. I know we have a guy in our chat room who has an average price of like $7. This was a call we had a long time ago in this thing. So these are prices here where you don't want to be aggressively buying into this, right? Especially with Bitcoin starting to be unsupportive. While it may test this high again, that's an opportunity to get out. If it goes slightly higher, you certainly don't want to be buying in this area. Look at the weekly pin bar beforehand, right? The weekly pin bar from a week earlier, bearish pin bar, took out the low of the pin bar, and now it's back inside. All right, fine. But the fact that it generated this signal right here, right? It took out that low. That's a bearish sign. It's a subtle bearish sign. So I would not be interested in longs, although this is a good-looking chart. It's generally a good-looking chart. So you want to get at least a better location. You had, I guess it came close to this, right? I guess earlier today. It came close to this support, but it's hard to step into that. There's no signal there. It's just a pin bar, right? It's just a tail on a candle. You can't step into that because you don't know if that's going to keep going. Even intraday, it's hard. Maybe if you're looking at a 4-hour chart or something, you could possibly, but you have to be babysitting that thing and watching it all day. I don't have time for that. So your next support would be somewhere around here, right? What is that? $30? So these are your levels, right? You have this level, you have the 32.70 and 30. If you're interested in buying something like an Atom, this would be like your zone. If it breaks below that zone, you're looking at this area here, which, like, we saw some coins before, right? One of those coins that we pulled up here was basically at like the double bottom low. So it can get there. The question is, how does it behave when it gets there, right? Right now, you're chasing it into a resistance. So I wouldn't buy this now. If you're going to get involved, at least wait for one of these supports. And also, it would be nice if Bitcoin was fully with you, because even though this thing looks good right now, if Bitcoin continues to fail and continues to break supports, which is not happening at the moment, but if it does, because the structure still supports that, I mean, you know, even though these things are acting relatively strong, I mean, look at Link, Chainlink. This thing has been strong the whole time, and Bitcoin has been breaking. But should you be buying this thing at a resistance level? If there's a dramatic move in Bitcoin, like if Bitcoin has a few thousand point move lower, these things are going to start to feel the pain, right? You don't want to be buying these things into resistances. If you have not taken the risk at much more attractive levels, if you have not done that, this is not the time to start. Does that make sense? This is a time to be getting out and distributing your risk and giving it to people who have no idea what they're doing at these levels. That's what you should be doing, not listening to hype. You're at the middle of the range right now. I know you asked me about the other one, but I just want to bring up Link because, again, it's another strong-looking coin, and it's likely to suck a lot of people in. You're in the middle of the range, right? Great place to get out. If it makes it to the high of the range, it's an even better place to get out. But you shouldn't be buying this here. It's very risky. Does that make sense? Right? Both of them, for both of them. All right, so let's move on here. Alex, why don't you use log on charts? Is linear better for you? Yeah, it doesn't really make a difference to me. You know, I mean, I just, you know, I've looked at logarithmic charts or whatever, and it just doesn't make a difference. You know, that's why I could use either one. It just so happens I have, you know, I just have these on. Okay, so let me see what else we got here. Schwartz, there he is. Schwartz had tie-offs. Ah, see, Schwartz, international man of mystery, international business. He's very discreet about what he does. Don't ask him what he does. All right, thanks for stopping by, Schwartz. It's good to see you. International man of mystery. What would I do without you? I almost turned my stream off. I almost said, you know what? I can't do the stream. If Schwartz isn't here, not doing the stream today. I'm joking. All right, HS. Okay, no problem. Hey, Dave, you sound much better. Happy to be. Could you please check out Link? Okay, so I just went over Link. There we go. See, I was a step ahead of you there. Yeah, I do feel better. I got rid of my cough and all that stuff. So thank you for the kind words. But yeah, so Link, like I said, Link is acting relatively strong, unusual. All right, so I suspect it's hype, whatever. I don't know what it is, but for something like Link, again, if you want to get involved, wait for a better level, especially since this is likely something like a Link is likely to be in a range, right? Go to the weekly chart. Look at this. This is not exactly bullish, right? So on the short term, on the daily chart, it looks bullish. You'll go, yeah, it's strong. But look at the weekly chart. You're nearer the top part of this consolidation. It's just a big consolidation. Not a good place to be buying. So you want to buy this thing? At least think about buying it lower, right there. And there's a good chance that it can get back there. Remember, everything is about probabilities here, and if the market offers the opportunity. You don't make the opportunity. The market offers the opportunity. A lot of people think that, you know, because it carries over from other businesses. You know, if you're a sales guy, you make opportunities. You make it happen. You make 1,000 calls a day. You push hard, right? And you make the opportunity. The market offers you opportunities, and you have to wait for them and recognize them. Every opportunity comes with risk. And you need to identify that risk and then decide, is this a risk I can take? Or I like the idea, how can I control my risk? Should I take a smaller size? Should I take a larger size? You know, what's the size of my account? If you are a guy with $3,000, you cannot trade the same way as a guy with $30,000 or $100,000 because they're going to have more flexibility because they have more money in the account, right? Anyway, okay. So thanks for asking, Dave. All right, let's move along. Alex, can you look at ICP after being the? It started to break resistance. All right. Let's take. I remember ICP was enormous hype. I remember this garbage coin. So yeah, look, it's changing its tune a bit, right? Obviously, they're getting some hype going here. Look, higher low, higher low. But here's the thing. You're correct. The structure is changing, right? There are higher lows in there. So that's a positive. Now, let's look at the level, though. So you have that old support, new resistance. This is not a good place to buy it because you're buying right into this area here. That's a resistance, and it's likely to become a failed high. It's trying to fail right now, in fact. Right? Look at that. Look at the red candle. If it takes out the low of that candle, you have a failed high in place. Just like Bitcoin at 69K was a failed high, same idea. So not a good place to be going long. Also, if this failed high, even though you do have higher lows and higher highs, don't lose sight of the overall structure. These resistances, see all these, they're still there, right? And if this establishes a high right here, relative to those, this is a lower high, even though it's a higher high relative to these little minor moves here. Does that make sense? So these are still going to carry some weight. And if this thing can still, be weak. So you have to be careful that there are situations that can be very conflicted that way, where you see higher lows, but the bigger picture is showing lower highs. Which ones do you believe? Well, it's really, you have to consider both of them and where you are relative to those. Now, if this thing is going to stay strong or continue this structure, then it should go for another higher low. It should establish another higher low. That could be a buying opportunity. So that may happen, something like that in that area there. But if it can't, or let's say, let me give you a scenario, okay? Let's say this thing gives you a bullish pin bar right there. And like, oh, all right, support. Okay, I'm going to buy this thing. It breaks the bullish pin bar and you buy it. All right, and now you're expecting a higher high. And instead of the higher high, you get another red candle that does that. The party's over, right? Take the loss, because that's not what it should do. If the bullish structure was going to be maintained, it should not do this, okay? And that would also give you a signal that the broader bearish structure is still in play, and you shouldn't be taking longs anymore. Does that make sense? You shouldn't be considering longs. If you want to short it, that's up to you. I don't like shorting these things. There are plenty of better instruments to short, okay? And anyway, but that's a personal thing. That's up to you. So that's ICP. I hope that makes sense. I know these things can be confusing at times because you have two structures, two competing structures, and you have to be able to put them, you need to be able to weight them, add like a weight or a context to them. So thanks for asking about ICP. Hey, Adrian, good to see you. Douglas, what do you think of the inflection point economic event in the .com era? Oh, interesting, Douglas. Well, a couple of things. Back then, again, interestingly enough, what did the Federal Reserve begin to do? They started to raise interest rates, coincidentally. I remember Greenspan would come out with these surprise rate hikes. I remember that. And at the time I was a moron. I had no idea what that meant. I had no idea what that meant for speculative assets or the future. I had no clue. Okay, but there was a point where he was raising rates, and that was part of it. And the money started to come out of everything. But I don't really, besides that, I don't really know what the specific catalyst was. I mean, at the time, and I'd have to look back at what was going on at that time, because back then, I was nowhere near as aware as I am now. Back then, I was a reactive trader. That's what I was taught to be. So all I was interested in was, can my stock go up 50 cents or $1, and can I grab a few hundred shares and try to make the spread? I mean, that's what we were doing back then. And then they introduced the decimal system to stocks, and then I couldn't even play that game anymore. But the reason why the day traders that I came up with, the reason why that game stopped was not because of the decimal, because stocks used to trade in fractions, but it's because algos basically dominate that space now. Real quick about algos. Today, most transactions, a majority of transactions are done through algos or algorithmic market making firms. They are competing on speed. So the way we used to compete was at the time, we had a fast connection because we were in an office that was connected to the NASDAQ. And when the point-and-click trader at home would place their order, their market order in the market, we were able to get to that order. We were able to get to the shares faster and then right away flip it out on the offer. And by the time the order gets there, right, they'd be buying it from us. And basically, that's the theory. Algos do that today, but in fractions of a second, right? You can't even see those transactions. They're so fast. Now, by doing that, they justify it and they say, well, we're making markets more stable and more efficient. But they're pulling that money out, that time inefficiency that would exist, and we're talking about seconds here. That's how we used to make money. That was our advantage. Algos enjoy that advantage today, and that's why it's so hard to be a day trader and really not worthwhile in my opinion most of the time, because of the random nature. You have some environments that'll be more favorable for day traders, and if you're a very skilled day trader, you probably could do okay, but most people should not even attempt because of what you're competing against. You don't even realize what you're competing against. You can't even see it. Okay, so anyway, thanks for asking. HK, I'm in Vienna. Oh, Austria. Okay, welcome. Given the upcoming market situation and breaks that you expect, would it make sense to short some stocks? Okay, good question. Stocks, individual stocks are they're risky. You know why? Because in individual stocks for shorts, there are other risk factors like gap risk. A stock can come out some really good news and the stupid thing is up 50 points now, gaps, and you're stuck in it, that kind of stuff. So if you're going to get short, it would make more sense to short an index like the NASDAQ or the S&P or the IWM. So yeah, there will be some short opportunities, I think, in the face of the tightening cycle. And right now, right, you definitely don't want to be short that, because that's a strong bullish reversal. Okay, so tomorrow should be green. Now again, who speaks tomorrow? Chairman Powell. So Chairman Powell may say something that causes this, or Chairman Powell may say something that causes a move the other way. But this is a pretty compelling move. Now, to answer your question though, with the tightening cycle coming, and I'm expecting I'm not expecting like a hard bear market, like a harsh bear market, but I'm expecting more of a consolidating, lack of follow through, fake out type of market, like a wave 4, kind of like what Bitcoin's been in, right? You want to be looking for shorts in this area here, okay? That's going to be the place to do it if you want to start playing that game. Or if there's any attempt at the highs, this would be the place to do it, okay? Those would be the places, not at these lows. A lot of people looking to buy this thing, and they certainly stepped in today, okay? So I hope that answers your question. But yeah, there will be shorting opportunities. You need to really be keen on the resistance levels, the signals, and what to do if they go wrong. I'm anticipating this somewhat bearish stuff. I could be wrong. And, some other catalyst may come out or whatever. Maybe the Fed changes their mind again, which is not very likely, but maybe, a couple of months go by and say, oh, you know what, we're going to stop with our rate hikes. We were just joking around. Sorry for the inconvenience. And the market goes berserk, right, and goes vertical. So that would require an adjustment. All right, I'm just throwing an exaggerated example out there. All right, so I hope that answers your question. But I think if you're going to do it, pick these, or, IWM. It's always better to pick an index because you're not exposed to the risks of a specific stock. Does that make sense? All right, so I hope that helps. What else? Let me see here. Okay, so Adrian, nice rant. Oh, cool. I'm glad you like my rant. I know I've been slow on the rants, but now that I'm feeling better, I'm angry again. So I've been ranting. All right, stay in pronunciation. Oh, stain. It looks like staying in. Okay, Stain. Hey, Stain. From Belgium. Yes, thank you. Okay. Thanks for stopping by from Belgium. Your mic saturates even more than usual. Oh, it's because I'm yelling. I'm yelling into the microphone. So if I'm over modulating your mics, I'm sorry. Your speakers, I'm sorry. If I'm distorting your speakers. Farhat. Hey, good to see you, Farhat. Cardano. Let's take a look. Cardano and EOS. Okay, okay. All right, so let's take a look real quick. So let's start with Cardano. I like when people ask about Cardano. I'm not going to yell at you about it. Someone had mentioned, please tell me about Cardano and please don't yell at me. And I'm not going to yell at you. All right. So Cardano, look, the reason why I get all excited about Cardano is because of the immense amount of hype that I've seen on it and how it's just fooled so many people. That's what bothers me. Okay, anyway. So Cardano should not have broken that support, right? It's been, all it has been doing is breaking supports. Yes, there is a potential reversal signal that's taking place right now. This is a bullish pin bar. It's a possible failed low. So this is a possible long, right? If it takes out the high of the candle. This, so I can make that candle bigger. The high of this candle is, what is that? $1.81. So if it takes out $1.81 tomorrow, you'll have a buy signal. I wouldn't expect a whole lot out of the buy signal because so far this structure has been proving nothing but lower highs and lower lows. So you'd be looking for a lower high to develop in that area there. You can make some money with that on a swing trade possibly, if you're, as long as you're watching it and making sure you're keeping your risk pretty tight. But if it establishes that lower high here, then then you're looking at another test of low. So that's the thing. That's why swing trades right now I think are extremely aggressive. There's no guarantee that it will even make it that far. The structures right now are not supportive. You have to decide if you're willing to take the chance. Right? Now look at this, just to give you an example. Look at this right here. How many people were willing to take that chance? Oh, look, it's rally. Hey, Cardano is going to 50x by tomorrow because my fake guru told me that it was going to. I'm going to be a millionaire. So how many people bought that, okay? And then this thing gives you the failed high. Oh, what's that? I'm going to hold on to it because my fake guru said, he said he's holding on to it, so I'm going to hold on to it too. Oh, I got margined out. I don't understand why. Okay, I know I'm being mean, but that's what I'm talking about. How many people, though, got caught in this because of the result of some hype or some other nonsense? So my point is, until the structure changes, don't be so optimistic about these. Yes, there's a buy signal developing now. And yes, you may be able to get a little run out of it, but be conservative. Don't be overly optimistic. Don't have any dreams about this thing until it proves otherwise. What will that require? You need to clear this resistance. That will be a proven change in structure at that point. But in order to clear that resistance, something is going to have to compel it, right? Like Bitcoin is going to have to be strong again. This thing is not a leader. It's a follower. So Bitcoin and Ethereum will have to be breaking their resistances for this thing to prove that. Otherwise, you have to assume, or I think it's more effective or more practical to assume that this thing is going to stay below this resistance. Maybe not make lower lows. Maybe it consolidates for a while, right? Which will give you some little opportunities to just buy and sell real quick if you want to try to play that game. I just think there are better instruments out there. There are better markets out there to work with, if you want to play a game like that. But that's the story with something like Cardano. Either way, don't get sucked into the hype, okay? Understand that until the structure changes, this thing is going to probably just be a pain to deal with, like it has been for some time. All right, so I hope that helps. Let's move along here. I got to wrap this up soon, but I have a nice group of people, so I want to try to answer as many questions as I can. So that was Cardano. Oh yeah, so what was the other one? EOS. All right, let's take a look at EOS real quick. You have a position in EOS that you've averaged into. So let's take a look. Now, and you said that you bought this thing 290, below 290. All right, let's put that price on the chart. So where's 290? 290, what's this low over here? 257 is the low. All right, so you're basically 290 is around here somewhere. Okay, I'm a little higher. All right, that's close enough, right? That's the area right there. So you've dollar cost averaging. Here's the thing. All of these coins, EOS and all these other garbage coins, these are not the best choices to dollar cost average into. They are not high quality assets. First thing, just keep that in mind. The risk on these is higher. If you were dollar cost averaging into Bitcoin, okay, it's the leader of the entire space. Ethereum, okay, not EOS. All right, so I don't want to discourage you. I just want you to understand that your risk is going to be greater. Number one. Number two, look at the weekly chart. Okay, look at this. This is not a good looking chart. This does not look like the stronger chart. Like Chainlink looks better than this. Matic looks better than this. This is basically this thing faked out over here. Okay, it established lower highs over here. another lower high over here, another lower high over here. It's taking out supports. So this is not really, you're asking for trouble, in my opinion. So just be careful. You have support here in this area. What is this? That is the $2.50 area. So it's trying to hold 250. So here's a suggestion. Don't keep averaging into it, right? If you have let's say your full amount, right? The full amount that you want to average, let's just say it's $1,000, okay? Just for an example, $1,000. And let's say you're 500 in right now. So let's say you're 50% in this thing right now. Hold off. I think it would be wise to hold off and either wait, because you have a position, okay? So either wait until this thing starts taking out resistance levels, right? Your first one being here at $3.49. Either that, or skew, because the structure is not favorable, and because you're in something that's highly speculative. I always talk about skewing larger at lower prices, but in a case like this, it probably makes sense to skew smaller. So instead of buying, $100 every month, because again, you should spread out your purchases like once a month, not based on some kind of chart event. So, instead of buying 100, maybe you just buy $50 worth. And if it gives you some very low, extreme low prices, like it breaks, Bitcoin breaks, then you have the choice of not buying that month and waiting for stability to come back into play. Does that make sense? Right? That will protect you somewhat or help you control your risk in case this thing keeps going. You don't want to get caught with a position, and you certainly, whatever your allocation is, let's say you chose $1,000, okay? Don't go over that, especially if it's going to be uncomfortable. Because what if this thing goes to $1? Wow, $1, I can't believe it's so low. I'm going to borrow money against my house and I'm going to put it into don't do that, all right? You have a set amount. These speculative assets should probably not occupy more than maximum 10% of your total portfolio, in my opinion, right? If you have a portfolio of stocks and bonds and whatever, these things should probably not occupy more than 10% because of their risky nature. Now, does that make sense? So keep that in mind. Whenever you're dealing with dollar cost averaging, you really have to look at it from a portfolio perspective, and you really have to judge it on that risk. How much of this portfolio is it going to consume? How much of your portfolio? And what's in a reasonable amount? Like if this thing consumes 50% of your portfolio, that's risky. It's extremely risky. And if you're wrong, you have to assume this. Chances are you're wrong, right? You have to assume that you're going to be wrong. And you have to assume that this is going to zero, because it will make you defensive, okay? I think it's a practical mindset. Doesn't mean it's going to go to zero, but you have to understand that the environment is working against you, not for you. Does that make sense? So I hope that helps. So again, I would skew smaller or just hold off until stability returns. It's going to depend on how aggressive or conservative you want to be. That's point number one. Point number two, don't overload. All right. So if you chose $1,000, that's it. Once you're all in, you're done. No more. Don't keep putting in more money into something that's not cooperating. If it starts to cooperate and it changes its structure, and say, okay, I'm all in, but I want to add a little more because the structure is now supportive. It's breaking highs, it's breaking resistance levels, it's becoming more bullish. Bitcoin's doing better again. The altcoins, okay, fine. In that case, at least you're buying into a supportive environment. Does that make sense? So that's what I'd say about something like that. Thanks for asking. David, today you were very inspired and free form. I'm just crazy today. I don't know why. Okay, Irina, I'd love to know the next support levels on BCH and Solana. Okay, sure. All right, I'm going to wrap this up here in just a moment, but yeah, I'm going to answer that question. Stay in. I don't know if I'm pronouncing that right. Stay in. If there's still some time, can you have a look at XRD? Sure. All right, let's see. Oh no, you got the Russian porn guy again. Haven't I told you this, Anna or whatever? You're spamming the wrong group, all right? Novice spammers. I have to hold on real quick, my spam lesson. If you want to spam a live stream, go to a fake guru that has 5,000 viewers, not someone that has 30 viewers, because none of my people, for one, are going to click on your porn link, right? None of people here, they're not going to do that. So you have a much better chance of getting click-throughs if you go to a 5,000 viewer stream, not mine. So get out of here, you Russian porn person. Ridiculous. All right. I'm just going through the chat here to see if I can catch up. Can you look at Alice? All right. How do you, the threat of Kai, that's a very good question. All right. So Pepe from the Czech Republic, welcome. All right. Got some new people here. Farhat, okay, no problem. And X, hey, how would a guy with 1 million account or more would trade than a guy with 10K account? Oh, all right. So there's some good questions here. I don't know if I'm going to be able to, oh man, yeah, I got to wrap this up in just a couple of minutes. I'm not going to be able to answer all these questions, but that's a very good question. All right, so let me go back here. Let me go back to Solana and BCH. All right, so what I'll do is I'll cover one of those. So now I'll see if I can get to Alice, and then I want to answer Kai's question because I've dealt with that, Kai, very frequently. All right, so let me go to BCH first. All right, over trading is a big problem, and all it does is make the broker rich, of course, and not you. So I'll talk about that in a moment. So BCH. Now look, BCH again is a follower. It's not a leader. And if we go to the weekly chart on BCH, I mean, look at this thing. I've never been a big fan of this thing, by the way, especially with all the drama and all the hype and all the garbage that goes on with this. It's just complete garbage, this thing, and all the hype and everything else, right? And you know, I know the guy behind, like I know of the guy and all that stuff, and I just think it's all nonsense. Anyway, all right, Bitcoin was first. Bitcoin is going to be the one that's recognized, not this. Anyway, you're at support levels, okay? So all hype aside and drama, you're at support levels here. And if Bitcoin breaks, this thing's breaking. This thing's been acting relatively weak to begin with. So you have to keep that in mind. Now, like we talked about before with a few other coins, these are not unattractive levels. These are not highs. So they are attractive for longs. If anything, we should be thinking long, but not necessarily putting money at risk just yet. So this is the weekly chart, okay? And you're in a support zone. So you have that going for you. But the thing is, the momentum is not going for you, right? Structure is bearish still, lower highs, okay? It's going for the low and it's testing that low. So I think right now, you know, if you're thinking swing trades, I don't think there's any reason, unless you want to be very aggressive, you wait for the pin bar to develop here and you want to go for it, right? Bitcoin and Ethereum should be doing the same thing. In fact, Bitcoin is trying. We looked at that earlier, right? Takes out the high of this candle, you have a buy signal, and that would basically be like a double bottom. But how far is this thing going to go? As long as this resistance is respected, this resistance area here, as long as that's respected, it's probably not going anywhere. Okay, so it may consolidate a bit. You may get a lower high. These are scenarios you need to watch for. A lower high over here, and then it goes for the lower low. You have to watch out for that. And Bitcoin, of course, should be doing something similar. So that's how I would treat that. As far as long-term positions, if you're in this thing, I mean, you know, you're in it for the long term. You should, if you're buying more or if you have your scheduled purchases, you just make your scheduled purchases. You're buying near lows. The only thing I would say is perhaps if you believe in the coin, you want to skew slightly larger. But since these are the highly speculative junk coins, I'm not a big fan of putting on more. Okay, if it was Bitcoin, if it was Ethereum, skewing larger at lower levels makes sense to me. But these don't make sense, okay? So in fact, I would do the opposite and skew smaller if this thing starts breaking supports, if you want to just add some more on, and then wait until the structure improves. When the structure of the entire space improves, you'll see the structure improve. Take a look at total, right? This is the entire space. The entire space hasn't broken this support yet, and you're getting the bullish pin bar, right, on total. So that's a bullish sign for the moment, but if it makes a lower high and this bearish structure stays intact, that means we're looking at lows in the future, right? We're looking at lower lows again, and it's going to be painful for everything. So that's the risk you have to keep in mind. Even though the broader structure is still bullish, it doesn't mean that the bearish structure is just going to go away, right? It has to reverse. It's going to take some time. So that's how I would treat something like that. I know it sounds confusing, but respect the bearish structure until it changes. Understand that it's still in play, even though we keep getting bullish signs, okay? And if it keeps breaking supports, this is total. If it keeps breaking supports, it's probably a good idea to just step aside and wait until stability comes back into the space. And I'm very suspect because of the rising rate environment that we're facing, right? I don't know how these things are going to behave, but I'm not assuming that they're going to behave well. Well, I could be wrong. We'll see. All right. So I'm not going to cover Solana. I want to get to Alice. I really got to wrap this up. I've been at this for 2 hours. I'm talking too much today. I have to stop. All right. Alice, real quick. Alice, and then I'm going to answer Kai real quick. All right. So Alice. Okay. Look, Alice, here's the story. You've broken support. There's no buy signal in this thing at all right now. While the other coins are trying to show a buy signal, this thing is not. It's got lower highs established here. I wouldn't do anything with this. There's nothing to do. Step aside. All right, I wouldn't accumulate this thing. Just step aside. Wait. If anything, wait for a buy signal to develop. You do have a support area, but there's no reason to buy at the moment. All right, so that's Alice in less than a minute. Now, Kai, how do you deal with over trading? Well, here's the thing. You have to be more selective, and to overtrade, if you're overtrading, that means your criteria is too loose, right? So you have to have stricter criteria. You have to have something that says, okay, usually stricter criteria means simpler criteria, really, right? Like this and this and this, they have to line up, otherwise nothing. Okay, I mean, and you can't be loose with that. It's like this, this, and this. And also another thing that can help is a daily loss limit. Because obviously if you're over trading, most likely you're not making money, right? A lot of time when I'd get caught in an over trading situation, it'd be because I'd be losing money and I try to make the money back. So, I have 3 trades and I'm up and I'm like, oh, I can make a little more. And I go to make a little more, I give back what I got, and now I generate 50 trades just trying to make the money back and break even, okay? And trying to just cover my commission. So you can't, and it's a day trader problem. It's not really, you don't really deal with that as a swing trader. So stricter criteria and a daily loss limit. If you can have the broker assert that limit on you, meaning you don't do it yourself, it automatically happens. Like, okay, my daily loss limit is $250 a day. If I'm minus $250, I can't trade anymore. My platform won't let me, right? You need to have something like that, because if it's up to your discretion, you're going to be, one more trade. Oh, okay, one more. Oh, I'm going to make my money back now, right? Like that's the problem that I've had. So you really need to have something strict that takes you out of the equation, all right? And that will help, I think, reduce the number of trades. But really having stricter criteria and being able to wait for very specific things, certain specific things to unfold, instead of being loose. Like, I know there's certain environments where being loose, like, oh, okay, I could buy this, I could buy that, this, that. But when things get very noisy, it could be very costly, right? And anything that you made in that positive environment, you give back anyway. So I would consider that. All right, anyway, so I got to wrap this up now. Zelta from Riga, Latvia. Okay. Yeah, all right, guys. So, and girls, thank you again. Thank you again for participating today. I know I've been longer than usual. I just can't stop myself. I just like to talk. I guess it's been a while since I've spoken to people. So I'm going to wrap this up. Listen, on Wednesday, I don't normally stream on Wednesdays, and I'm not going to stream on Thursdays anymore. On Wednesday, I'm going to have a special stream. It's going to be to talk about my training program. Okay, and who it's for and all that. My training program is going to open on Wednesday. Right now, I have no students. You're the first people to hear about this. So I'm going to explain all the details and explain how everything works then, so I can answer all your questions in real time. Also, for the people that come to my stream, I'm going to have a special price. Okay, I don't want to give it away at that price, but I want to have a special, generous price for people that are always here. If you're interested in the program, again, I'm not trying to force anyone into anything. I want to make sure that if you're interested, that you know exactly what you're getting into and exactly how it works. I want it to be 100% transparent so that, you know, the expectations are realistic and all that other stuff. So I'll go over those details then. So if you're interested, look for my stream on Wednesday. It'll be at the same time, normally 3 o'clock Eastern time. And, you know, we'll go over that, you know, for an hour. I'm going to try to make it interesting. Again, I want to show you what the program is about, how it can benefit you, the solution that you'd be getting into, what you're buying. Because again, it's not like these other garbage programs out there. I've gotten rid of all the fluff. There is no fluff. I respect your time. It's to the point. Okay, it's for, you know, someone that's busy that can't be playing around with charts all day, but at the same time, I made it so that it can be effective. And when you come out of that 14-day boot camp, you should be able to produce analysis similar to me, like you see me doing here, with that type of sense of context. Of course, I can't deliver 20 years in a 14-day program, but you'll know the information that I'm focusing on so that you could put the puzzle pieces together yourself. That's the objective of the program, okay? So anyway, we'll go over that on Wednesday if you're interested. Other than that, yeah, so Wednesday, 3 o'clock Eastern time, I'll create the you know, the YouTube stream thing, and you can check it out then. You'll all get a notification anyway if you're a subscriber of my channel, and we'll go from there. All right, everyone, so again, thank you all for taking the time to ask your questions. If I missed your question, I apologize. I have to wrap this up now. I've been here for a while, and I have to stop. So, you know, I'll be streaming again on Monday as far as analysis goes. So you can ask me a question again there, or you know my email. You can send me an email or something. All right, everyone. So thank you again for your participation. You can check out the links in the descriptive portion of this analysis if you want to know more about Greenbridge or my ebook. By the way, if you want to get a head start on my training program, it's the same content as my ebook. Okay, it's the same content in the same order. It's just the training program is more detailed and it has hands-on work that you have to do. The ebook doesn't have any of that. The ebook was meant to be an introduction. The training program was meant to deliver the meat so that you can do it yourself, right? The ebook, you have to pursue the topics on your own after you get the introduction. The training program, of course you can, but you should have enough practical knowledge at that point to produce analysis. Okay, so I'm going to leave you with that. Again, thank you all for taking the time here and asking great questions and participating. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you very much for watching.